Out of the major promises, here's the scorecard. No tax on tips, delivered with reasonable $25,000 cap. No tax on overtime, partially delivered with $12,500 cap. No tax on Social Security, not delivered. So during his campaign, Trump made some pretty bold promises about taxes. No tax on tips, no tax on Social Security, and no tax on overtime.
Well, look, it's a great bill. It's a massive tax cut. If it's not approved, your taxes will go up by 68%. Think of that, 68, a record, the highest in the history.
But now that we're seeing what's actually in the big, beautiful bill, I need to show you the reality versus what was promised. Some promises got delivered exactly as advertised, others got watered down significantly, and a few, well, they didn't make it into the bill at all. But here's what's interesting. In some cases, what we're actually getting might be better than what was originally promised. If you voted based on these tax promises, you deserve to know exactly what you're getting. And if you're trying to plan your finances around these changes, you need to understand the difference between campaign rhetoric and legislative reality. But here's the thing that caught me completely off guard, and I'll show you this later. There's one area where Congress actually exceeded Trump's original promise, and it could save middle-class families thousands more than anyone expected. If we haven't met yet, I'm Sean's clone, who is a tax professional, and today we're doing something different. We're going to fact-check the campaign promises against what's actually in the legislation. Look, I'm not here to play politics. I'm here to show you the financial reality of what this big, beautiful bill actually delivers versus what was promised on the campaign trail. Throughout this video, I'm going to take each major tax promise from the campaign, show you exactly what was said, and then break down what the actual legislation delivers. Some of these comparisons are going to surprise you, both positively and negatively. And if you appreciate this kind of straight talk analysis that cuts through the political noise and focuses on the financial facts, please hit that like button for the YouTube algorithm so other Americans can get the real story. Let's start with the biggest promise that actually got delivered exactly as advertised. Promise number one, no tax on tips. So let's start with Trump's most famous tax promise from the campaign trail. At rally after rally, he said no tax on tips.
But we're going to get it for you. No tax on tips. No tax on tips.
It was simple, it was catchy, and service workers loved it. Here's what he promised. Complete elimination of taxes on tip income for service workers. Here's what the bill actually delivers. Tips up to $25,000 per year are tax-free through a deduction. Now, is this exactly what was promised? Not quite. The $25,000 cap means that if you're a high-earning server or bartender making $30,000 in tips, you'll still pay taxes on $5,000 of that income. But let's be honest, for 95% of tipped workers, this delivers exactly what was promised. Let me show you the real-world impact. If you're a server making $35,000 in wages plus $20,000 in tips, under the current system, you pay taxes on the full $55,000. With this bill, you only pay taxes on $35,000. For someone in the 12% tax bracket, that's $2,400 in tax savings per year. Plus, you save on self-employment taxes too. So, on this promise, Trump delivered. The $25,000 cap is reasonable and covers the vast majority of tipped workers. Moving on to the second major promise, and this is where we start to see some significant changes. Promise number two, no tax on overtime. During the campaign, Trump's promise was clear. No tax on overtime pay. No qualifications, no caps, no restrictions. Here's what he promised. Complete elimination of taxes on all overtime income. Here's what the bill actually delivers. Overtime pay up to $12,500 per year is tax-free through a deduction. Now, this is where we see the first major modification. If you're someone who works a lot of overtime, maybe you're in construction, manufacturing, or healthcare, and you make $20,000 in overtime annually, you're only getting the tax break on the first $12,500. Let me put this in perspective. Say you're making $60,000 in regular wages and $15,000 in overtime. Under Trump's original promise, you pay taxes on just the $60,000. Under the actual bill, you pay taxes on $62,500, $60,000 plus $2,500 of the overtime that exceeds the cap. For most workers, this still delivers significant savings. That $12,500 deduction saves you about $1,500 to $2,000 in taxes, depending on your bracket. But it's not the unlimited benefit that was promised. This brings me to the third promise, and this is where we see the biggest gap between promise and reality. Promise number three, no tax on Social Security. This was a huge promise during the campaign. Trump repeatedly said he would eliminate taxes on Social Security benefits entirely.
I'm calling for no tax on tips, no tax on overtime, and no tax on Social Security benefits for our great seniors.
For seniors, this was potentially worth thousands of dollars per year. Here's what he promised: complete elimination of federal income taxes on Social Security benefits. Here's what the bill actually delivers: a $6,000 increase to the standard deduction for seniors 65 and older. Now, let me be clear, this is not the same thing, not even close. The $6,000 deduction boost is helpful, but it's nowhere near eliminating taxes on Social Security entirely. Here's the reality. Currently, if you're single and your combined income, including half your Social Security, exceeds $25,000, you pay taxes on up to 50% of your Social Security benefits. If it exceeds $34,000, you pay taxes on up to 85% of your benefits. This bill doesn't change that at all. What the $6,000 deduction does is reduce your overall taxable income. So if you're a single senior with $40,000 in total income, instead of having a $15,000 standard deduction, you now have $21,000. That saves you about $1,320 in taxes if you're in the 22% bracket. But let's compare this to what was promised. A senior with $30,000 in Social Security benefits currently pays taxes on about $12,750 of those benefits. Eliminating that entirely would save them roughly $1,400 to $2,800 per year, depending on their other income. The $6,000 deduction helps, but it's not the complete elimination that was promised. This is probably the biggest gap between campaign promise and legislative reality. The next chapter covers an area where the promise was actually exceeded. Promise number 4, middle-class tax cuts. During the campaign, Trump promised to extend the 2017 tax cuts and provide additional relief for middle-class families. But what actually made it into the bill goes beyond what was specifically promised. Here's what he promised: extension of the 2017 Tax Cuts and Jobs Act with additional middle-class relief. Here's what the bill actually delivers: extension of the 2017 cuts plus an estimated 15% tax cut for Americans earning between $30,000 and $80,000. This is where Congress actually exceeded the campaign promise. The 15% additional cut for middle-class earners wasn't specifically promised during the campaign. It was added during the legislative process. This includes increases to the standard deduction and child tax credits, along with auto loan deductions up to $10,000, expansions to health saving account limits, and new saving accounts for newborns. But for now, let me show you what this means. If you're single making $50,000 a year, under the expiring 2017 law, you'd pay about $3,800 in federal taxes. With just the extension, you'd pay the same $3,800. But with the additional 15% middle class cut, you're looking at roughly $3,200 in federal taxes. That's an extra $600 per year beyond what was promised, or about $50 more per month in your pocket. For families, the impact is even bigger. A married couple with 2 kids making $75,000 could see total tax savings of $1,200 to $1,500 per year compared to what the tax code would have been without any action. This brings me to an area where the promise got complicated by political reality. Promise number 5, SALT relief. Now, Trump didn't explicitly campaign on restoring the state and local tax deduction. In fact, his 2017 tax law capped it at $10,000. But there was an implicit understanding that something needed to be done for middle-class families in high-tax states. Here's what wasn't explicitly promised but was implied: relief for families in high-tax states who were hurt by the SALT cap. Here's what the bill actually delivers: SALT deduction cap raised to $40,000 for individuals making under $500,000. This is actually a massive win for middle-class families in states like New York, California, New Jersey, and Connecticut. The original $10,000 cap was devastating for teachers, nurses, firefighters, and other middle-class workers who owned homes in these areas. Let me show you the impact. A teacher in New York making $80,000, paying $6,000 in state taxes and $15,000 in property taxes can now deduct the full $21,000 instead of just $10,000. That saves about $2,400 in federal taxes annually. While this wasn't explicitly promised, it addresses one of the biggest complaints about the 2017 tax law and provides real relief to middle-class families. Moving on to a promise that got delivered with some important restrictions. Promise number 6, buy American tax incentives. Throughout the campaign, Trump emphasized supporting American manufacturing and American workers.
If you build the car only in America, we do it, Brian. If the car's not built in America, you don't get the interest rate deduction.
The car loan interest deduction is the legislative manifestation of this promise. Here's what was promised: tax incentives to support American manufacturing and American-made products. Here's what the bill actually delivers: up to $10,000 deduction for car loan interest, but only on new vehicles with final assembly in the United States. This delivers on the Buy American promise, but with significant restrictions. The limitation to new vehicles only means used car buyers don't benefit, even if they're buying American-made vehicles. Here's how it works. If you finance a $35,000 new American-made SUV at 6% interest, you might pay $2,000 in interest the first year, and you can deduct the full amount. For someone in the 22% tax bracket, that's $440 in tax savings. The restriction to new vehicles is significant. It means this benefit primarily helps people who can afford new cars, not those buying used American vehicles. It's a narrower benefit than the broad support American manufacturing promise might have implied. This brings me to the area where we see the biggest political compromise. Promise number 7, support for families. Trump's campaign emphasized support for American families, though he wasn't specific about child tax credit amounts. The legislative process has created two competing visions of what this support should look like. Here's what was promised: enhanced support for American families with children. Here's what was debated. House version wants $2,500 per child temporarily. Senate version wants $2,200 per child permanently. This is where we see the political process at work. Both versions increase the current $2,000 credit, but they take different approaches. The House approach gives families more money up front, an extra $1,000 per year for families with 2 kids through 2028, but then it drops back down. The Senate approach gives families less immediately, an extra $400 per year for families with 2 kids, but it's permanent. For a typical middle-class family, both versions deliver on the promise of enhanced family support, just with different timing and amounts. Now, let me show you the strategic opportunity that emerges when you combine what was actually delivered. Chapter number 8, the hidden opportunity. Here's what's fascinating. While some individual promises got modified or restricted, when you stack the benefits that were actually delivered, many families end up better off than if every promise had been kept exactly as stated. Let me show you with a real example. Take a married couple with 2 kids living in a high-tax state. One spouse works overtime, the other receives tips. Combined income of $120,000. Under the original campaign promises, if delivered exactly. No tax on $15,000 overtime, $1,800 savings. No tax on $20,000 tips, $2,400 savings. No SALT relief, 0 additional savings. Basic family support, minimal additional benefit under what's actually being delivered. No tax on $12,500 overtime, $1,500 savings. No tax on $20,000 tips, which is $2,400 savings. SALT relief on $25,000, say $3,300 savings. Enhanced child credit, $400 to $1,000 additional savings. 15% middle class cut, shackers $600 additional savings. Total under promises approximately $4,200 in savings. Total under actual bill approximately $8,200 in savings. The reality is that this family gets nearly twice the tax relief under the actual bill compared to the original promises, even though some individual promises were modified. This brings me to the final analysis of promises versus reality, the final verdict. Look, here's the honest truth about Trump's tax promises versus what's actually being delivered. Out of the major promises, here's the scorecard. No tax on tips, delivered with reasonable $25,000 cap. No tax on overtime, partially delivered with $12,500 cap. No tax on Social Security, not delivered. We got deduction boost instead. Middle class tax cuts, over-delivered. We got extra 15% cut. SALT relief, delivered, though not explicitly promised. Buy American incentives, delivered with restrictions. Family support, delivered. But here's what's really important. For most middle-class families, the combination of what was actually delivered provides more tax relief than the original promises would have. The SALT relief and additional middle-class cuts weren't part of the original campaign promises, but they provide massive benefits. The biggest disappointment is probably the Social Security promise. Seniors who voted based on that promise are getting help, but not the complete elimination of Social Security taxes that was promised. My recommendation, focus on what's actually being delivered rather than what was promised. If you work overtime or receive tips, you're getting significant tax relief. If you live in a high tax state, the SALT relief is huge. If you have kids, you're getting enhanced support. The bottom line, promises got modified, but the financial impact for middle-class families is still substantial. Sometimes legislative reality is better than campaign promises. The political reality is that campaign promises always get modified by the legislative process. What matters is whether you're better off financially, and for most middle-class Americans, this bill delivers real money back to your pocket. If you need help planning around these changes, check out the first link in the description.